Very good morning to you all. So you all welcome to IBSL November examination lecture cycle. So first of all, let me hear that you are hearing my voice. Can some?
Yes.
Yeah, Ravi. Very good morning. And Ravi, can you see the screen also, Ravi?
Yes, can see, but yeah.
This is like a screen like right.
Yes,
Fine.
can.
Very good. So Ravin, what we'll do is, since we have a couple of people joining, so let's make a kind of a bit of introduction among us. So I am going to start myself first. I am Tushar Asuraman, and right now I am working attached to Nation Trust Bank as Vice President Commercial Credit Management. So I have been lecturing with IBSL for the last 11 or 12 years on development financing and credit management. So basically, we bit of unfortunate that we could not have the examination for the previous lecture cycle due to pandemic that everybody aware with. But with this examination cycle, we expect that all examination from the last batch and this batch could be held on November as scheduled. So I just invite you to give a kind of brief introduction. What's your name, and where are you working? What area that you are into, like into credit operation. So let's start with, say, Ravin. So you are
Good morning to you all. I'm Ravin, working for Sampas Bank, and I'm attached to lending production division, and basically I'm handling the leasing portfolio administrative part.
Right. Thank you very much, Ravin, for the nice introduction. Can we hear from Nawaz? Right. Then Samindri, I think you're a familiar face to me. I think you have been with me for some previous session. Also, I'm not exactly remember which was that. Samindri, can you introduce yourself for the rest of the team? Samindri, do you hear us? Right. Then Shashika?
Good morning to you all, sir.
Good morning.
I'm Shashika Verisinghe and I'm working for Pan-Asia Bank and attached to Credit Risk Department, sir.
Good, Shashika. We have Tanya Daniel as well. Tanya, could you please introduce yourself?
Good morning. I'm Tanya and I work for Hat National Bank at the Recoveries Department.
Good. So we have got introduced Tanya, Shashika, Ravin, and myself. So we are yet to get the introduction from Nawaz and Samindri. Are you available right
Good morning,
now?
sir.
Yeah, Samindri.
Yes, I have been asked. Yeah, I was there last time.
Okay,
so I'm working.
Bit of communication or connection issue. Okay, Samindri. So we hear from you a bit later also, like since it's not exactly clear. Nawaz, could you please introduce if you are online?
Yes, good morning. I am Nawaz, attached to National Bank, Recoveries Department.
Right. So we have HNB.
We have some issues in my connection. May I drop a message?
Yeah. Yes, please, Samindri. Just to get kind of some idea. But anyway, so we can get to know each other. Like we are planning to work for about 3 to 4 months. Right. So it's nice to hear. So from everybody, we basically start another set of lecture cycle. So you are there again. I welcome you all very warmly to the development financing subject. So before we start, I just give you kind of some idea what is this subject and what exactly some background to this development financing subject. It's anyway, it's in diploma level, and it's coming under optional area. But when you see the pass rates, the last maybe 8-9 examination cycles, it appears that very high pass rates are recorded in terms of development financing subject. So means that it is very easy to pass. So hence that no worries at all if you are attending my classes, and if you're following kinds of basic guidelines I just share with you to follow, then it won't be a big issue to get into this paper. So my invitation to you is like we need to understand, and we need to get maximum out of this paper and get a very higher grade when you are writing and attempting the paper, because it's such a easy if you plan it and the way that the things have been organized. Yeah, Samindra has given introduction. I'll share with you for your benefit. She is from Valimada. She is working to HNB attached to PFS credits branch bank. So we have a couple of HNB representation, Sampath and Pan Asia as well. So in time that we can get the others also and get an idea who are the others, and we'll further move. And we have Andrew join. Andrew, would you mind giving me a brief introduction about yourself?
Hi, sir. Good morning.
Hi.
I'm from HMB2. I'm from the banking department of HMB.
Great, Andrew. Nice to work with you. So we have a couple of HNBs here. So I was briefing Andrew about the development financing subject, and how what's like the background to the development financing paper. So it's like as I was telling, it's like easy paper in terms of exam. So our target would be to get maximum out of the the paper and to score a very high mark. So that should be everybody's aim, right? Number two, when you think about the practical applicability of this paper, or the subject is like, this is again like optional in a banking environment also. We see this is a particular niche area in a given bank, right? So if you see that you have consumer banking, SME banking, corporate banking, wholesale kind of, but when you say a project financing, a development financing, it's a niche under maybe SME, or it could be under corporate. When you, in terms of corporate, we talk about development financing at high level, like project financing, infrastructure financing. When it comes to SME, a development financing could be like microfinancing, or sort of financing where the clients are not relevant to SME. Like HNB, I know for sure that you have been doing a very good job in terms of microfinancing area. So it could be something about the development financing arm. Again, that when you say SME banking also, there is a set of customers we can think about as project or development oriented lending. So over the discussion that I will explain. So generally, how this is being differentiated between the day-to-day banking versus the rest is, in development banking, we basically see that we try to finance something new, like, right, or project, right, something different to our day-to-day banking. So when you say about trading, working capital financing, it's bit differ from development banking, development finance. So we'll understand some features of the development financing during the today's discussion as well. Right. And then I just want to brief or kind of give some kind of idea what should be the like your expectations in conducting or studying this paper. Now generally, though that we do like this is as online, so what I am trying to do is I will do maximum in terms of delivery by PowerPoint presentations and some reading materials to these lectures. That's basically is the first method of sharing knowledge, number one. Number two could be, depending on the time or depending on the what you call applicability. So we try to do some past paper question when we do each and every area. So that gives us some understanding about how the examination questions has been set respect to a particular lesson or the syllabus area. So that also be the number two. The number three would be at the end of the session, again depending on the time. So we try to do some selected past paper questions also. So with that, so we are almost there to address the paper to get whatever the marks that I have been discussing with you. Number two could be, as I was telling, this is a bit of niche area in terms of banking and new departments. But if you are really interested on development, project financing, microfinancing, SME project financing, so this is the area for you, because let's say you are doing credit, or if you are interested to move into the credit, so this is like very good area to thorough. Right? So when you are having qualified in say project financing, infrastructure financing, then there may be very good job opportunity in the market also you to apply. So that keep that in mind also, right? So hence you try to learn beyond what we are discussing here. Maybe when you go through a paper, when you go through article, at office maybe you can consult with your colleague who are working in the project financing. So let's try to learn more and more than what we are discussing here. So then we'll give you a better idea, so better insights to the project financing, development financing concepts. So that's basically my invitation to you to get a more non-exam oriented application. So that is required. What happened otherwise is, so we actually try to do lessons, and after actually you want to get pass the exam, so you will be obviously do it, and beyond that, since that is what applied in your working context also, banking context also, since you are not doing very much into the banking, if you are outside the credit, then you might forget it. So but don't do it. So try to make a kind of interest, passion on these sort of lending techniques, because going forward we see higher application, higher applicability in these areas that we are discussing about project financing, infrastructure financing, even SME finance to great extent, and microfinancing. The microfinancing like LOLC is doing very much great, and even they are now crossing the boundaries in different countries in African continent, right? So they are very much successful in this microfinancing proposition. Like HNB also doing it very successfully for the last, I think, 5 to 10 years. Maybe other banks also maybe doing it, not in a commercial scale, but they're also doing it, because when you are understanding the microfinancing lessons in time to come, so you can see so many importance on these areas. So that's all about kind of a brief introduction on the what you call development financing subject, which obviously I will touch, we will brief in time to come also, the important anything that I expect from you, right? So other than that, I just give a kind of brief idea. So what is this all about? And the one final comment could be here is like you need to maintain a file, right? It could be some box file where try to capture, find articles, right? And keep print out within that. For this digital world, you may not be very much happy to have hard copies, but I know if you can, save it in the phone or the laptop, wherever you find articles relevant to SME, micro, project financing, development initiatives, so and so forth, that's also fine. But in case if we can keep it in hard copy in a file also, that's better, because given the timeline, given the workload, you may not be refer everything then and there. So you might have some free time in weekends or your holidays, or when you come back from office, so you have some extra time. So then during that time, try to read those articles, maybe what is happening in the fiscal sector in the government, what happening in the monetary sector. So these days we talk about dollar lack of dollars in the market and how to pay debts. Economic growth has reduced. There's so many things we have been spoken, and then more general points like moving to non-organic to organic fertilizer. What could be the impact to the farmers and the agriculture sector? So those are even some of the questions could come to our papers, which has been the practice for the last 6-7 years. So just get some interest, idea what's happening in terms of banking environment, especially focusing the development area. So if you find article, so try to get it saved from in desktop or the whatever in the soft copy form possible. Take a copy and keep it in the disk, the box file that you are maintaining. So when you have free time, go through it and read it and get more and more into that. So that's basically just wanted to update you on the subject, the way that we are going to conduct the subject, expectations from you, and what could be the final outcome. Passing the exam is number one, and gathering, nurturing more insights, knowledge on the development financing. So at the end of the 5 to 6 months, yes, obviously you should be a master on development financing technique. Whenever your colleague is trying to do something, so probably you are in a position to advise him whatever the things that you have learned. So that's the best way that you can impart your knowledge and also enhance your knowledge as well. Right. So we have some more also joined here. So let's see that we can get an idea on that. Yeah, Akilan has joined. Akilan, would you mind giving a brief introduction about you, since that others have introduced themselves? Which bank you are working and in which area? Is it possible to give a brief introduction? Or Roshni, you have joined. So which bank you are working and which area? Okay, so let's hear. Yeah, Roshni, please proceed.
I'm Roshni. I'm working at Hat National Bank.
Right.
And I'm at private banking sector. Okay,
nice to hear from you, Roshni. So we have fourth participant from the HNB. So this is basically HNB development financing session. So let's see. Akilan, would you mind give a brief introduction from you as well, if you are in connection? Okay, let's see. You might have some issues with connection. So I think we have got everybody introduced. So in going forward also we can introduce each other and get to know each other, and so try to do some couple of group works in like maybe future sessions, depending on how well that we can manage it, right? So then what I will do is first I will give you an introduction again about the syllabus, right? And then we will move to the first lesson. I hope you can see the screen. That's the syllabus overview. Ravin, anything if you can't see, please let me know on behalf of your team, right? So we have basically 4 areas in development financing in our syllabus. That is introduction to project financing, project appraisal, SME banking, and microfinancing. So out of the 4, the introduction is very small area where maybe not less than like 2%, 3% of your syllabus. But though this is like a formal introduction we are going to do, but we need this the foundation in all other areas of discussion. So what generally we do is, so we will take a kind of, the first day to run through a brief introduction about the project financing and what's a development financing. And then we will, when we are discussing with other areas, we will again come back and see what is the like applicability, what like the features of the project financing or the development financing, which is linking to those other areas. So like that, so we'll continuously touch on this area, right? So specifically under the introduction to project financing, what we discuss is, why the project financing is rationale, right? So why on earth this, like, the concepts come, the project financing, we just wanted to know why it is available, right, in the market. And then we try to, define. There may be so many definitions, but we try to understand some definitions, underline, the concepts in the project financing. Third, so we try to understand, so what do you mean by the collateral-based financing and the project-based finance? What's the difference between, asset-based versus project-based? So we try to understand those as well. Then maybe types of collateral, types of projects. So just to, go through a bit of, the insights into that. Even some may be discussing today, and so we'll discuss the rest in over the course structure. Then part 2, project appraisal is like is very detailed area where it basically goes like 40 to maybe 50% of your syllabus is totally with the project appraisal, right? So then it talks about, like, how we are going to assess the viability, the feasibility of the project, right? When you ascertain the feasibility or viability, what are the area that you will go through? That's about market feasibility, that about management feasibility, that about technical feasibility, that about financial feasibility, environment, economic feasibility, right? So there are so many areas that you need to be checked before see the project is viable. So we are going to understand and study each and every area in detail. So while we are learning this project financing area. So again, sometimes that we need to understand. So once we granted the credit, granted project financing loan, there may be chances that, the project would go bad due to various reasons. It could be internal or external, maybe the promoters, issues, or maybe due to outside issues, right? So we might have to come across, there are so many other things also. So we try to see that what we could do to, revert back or rehabilitate, right, the original position of, the project, or at least near original levels, because then only that they can, revive the project and pay your dues. Like similarly, a third area could be SME financing. Beyond SME financing, we will try to define what is SME, right? What are the SME products? Why SMEs are important to, financial institutions, and how the SMEs or the rest of the arms of the bank is sourcing the funding, right? What are the concessions offered by the government and the rest of organization to promote SME? So that again is a very interesting area, and you see in the market also. So from the government to all sort of regulators and authorities are very much keen on promoting SMEs. Even the banks also very much keen on promoting SME, because it's anyway it's a way forward for us. And if you think about, the micro or a small level lenders, and then if you think about corporate bankers and very high level lenders, so in between every time we have small and medium enterprises. So it's like very lucrative market for everybody, right? Because sometimes there may be, micro people enter into the SME market, and then also you see sometimes the SMEs also moving up to the corporate level. So means that, SMEs are there So anytime at large, so you can do the banking with this sector. So in terms of quantity, in terms of quality, in terms of income, right? So this is very much viable or very much important market for any bank. So having said that, in the SME banking also, we have an opportunity to offer these development banking products, like project financing to SME customers. And that's what we are interested here. Right? Because now, when you say the SME, yes, they do trading, they do so many other like working capital financing, or they maybe go for the capital capex financing. So that's generally we understand our day-to-day banking. I just give an example for better understand. Let's say a customer who runs a commercial shop, right? Maybe into the trading. If they want to purchase further stocks, we try to finance them through the working capital products, maybe overdraft, short-term loan, maybe a pledge loan. So that's a working capital financing. Similarly, if they want to go for a guarantee with the bank guarantee kind of thing, it's a off-balance sheet, again working capital. So you offer some working capital financing in terms of intangible product like bank guarantee. Or let's say that particular person wanted to purchase a bare land or a land adjoining to that, or put another what do you call storeroom, warehouse. That's straightforward. It's something that you can, based on the existing income, you can give a loan, term loan to 4 to 5 years, and he can easily repay through the existing income. So maybe that called capex. So we are done capex financing, working capital financing, on balance sheet, off balance sheet. So we are very much familiar those things. But let's say this SME person wanted to put up, say, small supermarket. So bit different what we have been talking so far, because he might understand about the model of the supermarket. So first he has to find a place, purchase of the land, put up the building, and do some market research. So discuss with some suppliers, maybe some advertising to find out new customers, because it's a different concepts to what he's doing right now. So that sort of financing proposition could be considered as a project for this person. Well, it's a startup. It's a new venture. So you can't assume your existing income will always come and support to pay the repayment of the supermarket. No, it's a wrong assumption. So the ideal assumption, ideal concept would be supermarket would generate income through the supermarket, and then it should survive itself, self-sufficient, to repay the debts which the supermarket is asking. So you getting my point? So that type of financing, it's a small example for you to understand, that we call the project financing into the SME sector, right? So otherwise you just can't say existing business would service a supermarket business and straightforward loan. No, there again it's a new concept, new proposition, starting from the scratch. You go to maybe a very high level, but step by step. There again you have some capex financing, working capital financing, working capital off balance sheet financing, and non-financing activities. So many things to come together to the project, to the supermarket, be successful. So that's like we call about SME financing into project concept, right? So that's a third area that we are trying to understand. The fourth is basically a microfinancing. So microfinancing is not very much, what do you call, popular in Sri Lanka compared to some other countries like, the Bangladesh, Myanmar and all that. But here also, as a proposition, we are doing it, and we can find so many very good companies have done. As I was telling you, in terms of bank, HNB is doing very much what you call consistent basis. Like LOLCs again are doing very much positively, and even they have moved the Sri Lankan boundaries also. So, but here we try to understand what is microfinancing, why it is important, who are the the beneficiaries, what are the challenges that you need to understand when microfinancing professions. So like that. So there are so many things that we need to understand and discuss in each area. So this is basically about the syllabus that we are planning to study during these 4 to 5 months. So basically, if exam weight also, if you take microfinancing, we see at least one question in every 2 sessions. SME financing, so we see a regular question from each session, or maybe even 2 questions could come from the SME. An introduction and sort of thing, very rare, but we might get something, one question, not exactly from introduction area, but it could couple to overall project financing concept. And then project financing, again, we might see about 2 to 3 questions. So that sums about the something about 6 question in terms of direct syllabus. There are maybe 1 or 2 other questions coming from general environment. Again, some links to this what do you call these concepts. They check about general economy, they check about refinancing in kind of line, government activities, actions they have taken, maybe the fertilizer issue, right? Or maybe industry growth, inflation. So there are so many other general things also put into the question paper. So that's why I invited you to read beyond what we are learning here, because that may be very timely topics could be introduced to the paper, but they are not difficult. But only thing is better we are familiar with. Like for example, now these days we are talking about what? A stopping of GSP plus. So then probably there could be a question to that extent. What could be the impact on Sri Lankan export market, Sri Lankan SMEs, in case if we are, if the European Union is going to stop GSP plus. So in order to answer that, yes, you can take some inputs from what we are learning here, but the majority, it could be some outside sources. So what could be the impact in terms of exporters, maybe the local, maybe raw material suppliers to export companies, generally the government, general public, right? So then what could be our efficiencies, maybe the capex that you need to introduce on our processes, because in order to compete with the non-quota scenario, so we need to increase our quality of the output. So for that, you need to invest something. So probably that they need further investment or loans from the banks. So those are some of the things that, you need to discuss. But you just can't, discuss those things when you sit in the exam and then a GSP plus. So sometimes we know ABC of GSP plus. What is the GSP plus? You understand? Or EU sanctions on, say, fishing. So you can't, just figure out and write it if you don't have any prior knowledge. So I'm inviting you to be aware with the current trends in banking. That is anyway good for your personal knowledge, as well as it support your day-to-day banking. So that's very much briefly I discussed the syllabus with you. Now, any questions on what we have discussed so far? Anytime you can ask questions, anytime you can put a message, right? So we can, discuss then and there. If I am unable to answer particular question, so I'll obviously come back and, and then we'll discuss it later. So no harm. So any questions so far? Any thoughts that you decided to undertake the development financing? Any idea? You get reference from your colleagues, or you just, without any reference, you just take a challenge to you study the development financing because it's one of the optional subjects, or it's mandatory to do a couple of subjects to pass the exam. Any thoughts? Why you selected to undertake a development financing subject? Nawaz, Shashika, Ravin, any thoughts? You were referred by one of your friends who you just thought that it's good to do, and have you done any homework prior to start the course, or did you think that it would support your current job role? Any thoughts? It's good that then I also can support your objective, so we can have a very good understanding each of you, and then we can map out our the lesson delivery in line with what your expectations. Any thoughts? Ravin, anything to say?
Actually, sir, I'm attached to lending products, so therefore I need some background of development financing also to actually to know some insights of development banking. And
Right. Very good, Ravin. Thank you so much for your feedback. Any any friends that you have done development financing subject, did they refer you to do development financing subject in terms of examination? It's a like easy subject to pass kind of thing, or just you thought that it would be useful to you what you are doing right now? Anything from Shashika? Andrew? Namas? Any thoughts about how do you feel about the subject now? What could be what the impact or importance?
Actually, sir, in my case, one of my friends told me to select this because it's easy to pass. That's why I didn't have any idea.
Good, good. How do you feel now? Because we have just get a brief idea. So, do you think that it would be useful to your day-to-day banking, or it could be like you can take a lot out of these subjects? So, how do you feel?
Yes, sir. The thing is, myself and Tanya, both we are working at recoveries at the National Bank Central Recoveries. So day to day we are doing. Both of us are handling 3 regions. Almost, I am handling 68 branches. So that means we are dealing with SME NPS, corporate NPS, all kind of NPS. So I think it's a good time for me to get an idea doing this development finance.
Yeah, very good, Nawaz. Very good point. When you are doing a recovery, yes, now we can undertake the recovery 2 ways. No, you just go and recover, right? But the other thing is, yes, you recover with a sense of understanding about product, clients, and offerings, right? So those things actually you can get it enhanced through this learning, because we try to learn so many products here. Kind of the solutions to the rehabilitation on NPL customers, and then what are the the areas that you would look in terms of feasibility, viability in project financing. That could be obviously you can see when customer falling into trouble. When you see and discuss with the customer, then you understand what went wrong, because now you are learning the fundamentals about viability of the project. So then you can advise in a post-lending scenario, even the customer is NPL, then why not you look into the market even right now? Why not you look into the management of the company again? So because otherwise we might just offer the restructure, but it doesn't work, because if you can't understand actual cause for that collapse. So since that you are trying to learn it again, coming back of the value chain to the start of the value chain, so that will feed you for your job in a further what do you call upgraded way. So like that, so very good point, Namas. Though you are in a recovery, though you are in a front office, though you are in a support service, so try to learn these the concepts in order to what do you call complement what you are doing right now. So don't think that I am doing recovery, but out of the syllabus only 5% to 10% is recovery, then the rest is only for my exams. No. So that 90% which you don't know probably will help you to do your recovery better. Right? Then you can advise, the branch managers and all that, because yes, don't go and just recover. Recover with the solution. That is what we need to do. I mean, in today's banking, yes, many of times that we are trying to do, not just for the restructure, not just for reschedulement, not just for rehabilitation, because again, that could, go bad if we have not identify the proper cause. So very good point. So let's hear from others also over couple of discussions, couple of weeks ahead. So then and there, so we'll share our ideas. Right. Having said that, so then we move to the first area, the first lesson. So that is the introduction to the project financing. Again, hope that you can see the slides. That is introduction to the project lending and types of lending. Right.
Sorry to disturb you, sir.
Yes.
Are we getting these slides?
Yes, obviously you need to get, I think I have shared those slides with IBSL. So probably they would upload those into your Google account. So what I hear is they might have not done yet, right?
Yes.
Right, probably they would do in course of maybe within the week, because they just started with a very short notice. So you need not to get it, whatever screenshot or whatever something. So everything you would be getting about the presentations plus the reading materials. I have shared with them. But if you think that anything important while we are discussing these things, you can put a kind of a short notes and you can refer it with your notes once you get it. Am I clear to you, Avi?
I think, sir, the notes are in the Google Classroom. Right. You can get the notes. It's there.
Right. So then again, relog in and then you see whether it's available. If not, you can talk to these IBSL people. There are a couple of good guys like Kavindra, Geeta, and so they might help you, because today, tomorrow they might be busy, but after Tuesday also, that you can see if there is any technical issue. But I presume that they would upload everything that what we are discussing during the class, right? So the content for the presentation, the first lesson is basically the nature, importance of the project financing, why the rationale of the project financing. So we try to define the project financing, and then key stage of the project cycle, lending categories, collateral, project-based financing. This is basically a kind of some introduction to the lending, project financing, project lending, right? So don't worry that if you not get everything conceptualize everything very clear in today's session. So we will continue these concepts over a period of other lessons also. We'll again come back here, we'll discuss. But so basically what I want is so we want to share the kind of experience, maybe from my end and your end as well. So since that you have different exposure, maybe recovery to, lending to, so other areas also. So you also can chip in and share your experience while we deliver these lectures. So then others would get benefited, obviously, right? So nature, importance. So we'll try to understand what's difference between this project financing versus the normal lending, normal business financing, right? So the nature of the project financing is long versus the short. What it means? So long term rather than the short term means as we discussed in the previous example, if customer wanted to purchase working capital, and then you offer short-term revolving loan, that to be repaid in maybe 3 months, 6 months. But it's very short-term oriented, because we know for sure the funded item, once realized, pay off your debts, right? But think about purchasing adjacent land. That again is a medium-term investment, right? Because maybe right now is generating adequate cash flow, flows, and he can pay off the particular loan in 2 to 3 to 4 years because it's generating existing business income. The third, what about he plan, purchase a land, put up a building, start the supermarket business, generate income, repay your debts. That is not a short term, medium term, but it's related to long term investment. Or similar that you plan to put up a hotel, maybe 3-star hotel in somewhere, Kalpitia or Manor. So you can't expect the short term return, medium term return. It's beyond 5 years, beyond 7 years. It's a long term. So when you see your financing is long term, so it's like more relevant to project financing. But remember, a housing loan, it's not a project financing. Why? It's not coming. I will explain why in a bit later. It's like consumption purposes. You give a loan to put up a house, and the repayment is coming from your salary or your existing business. It's because it's consumption. It doesn't generate any cash flows. Your loan is not being serviced through the cash flows generated from the particular business proposal. So that's why the housing is, somebody can take or argue, it's long term. But it's not a project financing. A project is something, a complex, like further understand the third point also, but it's a long term perspective. Repayments are linked for a long term course. One. Number two, larger versus a smaller. Investment is large. Investment is not 1 million, 2 million, 5 million, 10 million. It could be something 50 million, 75 million, 100 million. It could be hotel, it could be supermarket, it could be tea factory, it could be ice factory. So those are a bit of higher investments, right? So you as a promoter, you as a sponsor, you need to sponsor, you need to incur higher cost, higher investment, which you can't do alone. You need to get the support from the bank sometimes. So you get together and do it. So that's why, the project financing is not a easy venture, right? So it's a kind of combination of the bank and the promoter. Third, it's complicated in terms of future cash flows, in terms of time value of money. Very two important concepts. I'll touch briefly and later we will learn one session relevant to time value of money. Here, more complicated from concerns of future cash flows. What it means. Now, cash flows could be current and future. Let's say if you are running a boutique shop, a commercial shop, you are getting cash flows, daily cash flows. Those are current. You are getting it today. And you can use it for repayments which occur from current and also even some repayment for future. Because a previous example, you purchasing adjoining property, it's not a big deal, right? It doesn't make further generation of cash. It's just an investment, right? You can outright sell it and later, and then you can get something back. But since we are generating income today, you can use that to service the loan. So that's why we not classify it as a project loan. But when you say future cash flows, it's different. The future cash flows is basically like a supermarket, like a hotel. They need to generate cash flows in future to settle the loan that you are approving. That's because the future cash flows, right? And time value of money. What is the time value of money? So it's very simple. It's something, having 100 rupees today is not equal having the same 100 rupees in year 1. Let's say if you have 100 rupees, you go to supermarket, you purchase, bit of some commodities or vegetables or whatever. Assume. But even after 1 year, when you go to do the same thing, probably you might not be able to purchase everything you purchased 1 year before. What it means, there is reduction of that money, value of the money. Over a period of time, the value has come down. Means 100 rupees today would value maybe 95 rupees in future. So another concept that you need to be aware with. So future cash flows is one, time value of is another one. So we have to be careful when financing the projects, because these two concepts would impact your project viability. So if the venture having these features, there may be so many others also, then we can think about classifying it as a project than just a lending. So long-term versus short-term, larger investment versus a smaller investment, more complicated in terms of future cash flows and or a time value of money. Any questions about the nature? You can ask anything. Any questions? Clear? Please ask questions if you're not clear. No questions means that you are clear. Okay, can we proceed? Okay, so then importance. Why it is important? One thing is like large amounts are involved. So in this case, yes, you are trying to put up a hotel, tea factory, ice factory, supermarket, because it's a big investment. So why you want to do that? It could be one of your business strategies you plan for next 2 to 3 years. In terms of acquiring, in terms of enhancing the profitability or higher profitability. Or maybe your survival, because now you see that, just running a commercial boutique shop will not help you in long run. You need to move to the next level, because you see so many supermarkets are coming, right? Very established supermarkets, and some of the established guys also like putting supermarkets in different names. So then people, change their buying pattern, and they prefer to go to supermarket and pick and choose, selectively and pay the money like that. So it's a survival of your business concept. So then, hence that, resources, not only funds, but other efforts also would require. So large amount of resources are required. So that's, hence this is important. So once you invest, let's say 50 million, 75 million, 100 million, right? But how you are going to find that? What would happen if you make a loss? That would impact your total business. Hence, it's important. Not about 3 million loan that you are talking about. Adjoining in land, 5 million. It's not a big deal based on your operation right now. But about a 50 million investment, it could be do or die situation. If it is not going to be successful, you lose even your present business levels also. So hence it is important, because large amounts, difficult to bail out. Once you invest at it, it's a bit difficult, because you need some free feasibilities also. You have to do some market research, for example, and see whether to see the potential. One, you may have to, incur some initial cost before, launching the concept. Even once after starting the project, maybe ground preparations and other things, put up a building, right? Then you can't, convert it to some other business, because it's intended to as a supermarket. So if you are not successful in terms of running the supermarket, making income, generating income as a supermarket, then very difficult to bail it out that investment. So then it's important for you. So technically, you need to know the nature, importance. This is a very important slide. You can put a tick and keep it. Why? Because there are some questions and they would ask, why do you think project financing is important to bank, important to economy, important to sponsor? What are the features or nature in project financing, infrastructure financing? So probably you need to write some 2-3 points. So this slide would be important to support that question. So take it as important slide. Right. Then we try to understand some definition, formal definitions in terms of project financing. So it's like, sorry, long-term financing of infrastructure and industrial projects based upon the projected cash flows of the project rather than the balance sheets of the project sponsors. What it means. 2-3 key ideas. Long-term financing of infrastructure and industrial projects based on the projected cash flows of the project rather than the balance sheet of the project sponsor. Means, now early example, we thought about purchasing adjoining land and we depend on customer existing cash flows, existing business operation. So that's what we call balance sheet of the project sponsor. Because right now, yes, he's doing well. Adequate means, adequate cash flows. So we can easily give a loan and he will service it. But in terms of project financing, no, it is not. It's about you invest a long-term financing, infrastructure like supermarket to tea factory to ice factory to like that. And the cash flows are future. Future cash flow should be there. The supermarket should generate cash flows. And that cash flows to be used to service the debts. You getting my point? So, if not, it's not easy to do the financing. So, there are 2-3 points coming here. If it is so, then we can classify it as a project financing. It's future cash flows, projected cash flows, similar words, or it involves with financing long-term infrastructure, industrial projects, then we identify them as project or project financing. Second, secured by project assets and entirely from the project cash flows than from the general assets or credit facilities of the project sponsors, earlier also mentioned. So you can't fund the supermarket considering the customer is a paymaster. It's good for this exposure. No, just you can't take that decision. You need to worry about the future cash generation. And then when you are trying to finance a supermarket or a hotel, you can't just say that, I am having existing collaterals. Against that, I will fund that project. No, generally you shouldn't be doing it. You have to get the mortgage over the project assets. Project assets, right? Those are your collaterals, right? Third, generally, lender sponsors given lien on all of these assets and able to assume control of the project if the project company has difficulties complying with the loan terms. Project lenders are given a lien on all of these assets and are able to assume control of project if the project company has difficulties complying with the loan terms. Like all the project assets, maybe the land to building to stocks to cash assignments, are lien to us, are security for us if we are financing that. In case, if they are unable to service the debt, then bank has the right to involve into the operations also to revive the business and repay the debts. To that extent, we should have a control, because otherwise we also in the losing end, because it's a 100 billion project, for example. Customer put in 60 million, so we put in 40 million. Oh, customer put in 40 million, we put 60 million. If something goes bad, he lose 40, we lose 60. So we have an equal or more responsibility in running the venture successfully. And again, it's futuristic. And again, it should generate future cash flows. You can't just close your eyes and see that you have funded and it's your business. No. It's together we need to do. Okay. Right. These are the formal definition. There are so many things that you can find if you go to Google or whatever. So many things. But some concepts. Futuristic, projected cash flows, future cash flows, project assets, industrial projects, long-term financing, more control over project operations. In case of the difficulty of running the projects, bank can involve and running the projects. There are so many things that you can understand, you can find. So based on that, you can define the project or project financing. Right. Any questions? All right, we'll continue. Then we'll try to understand a project cycle also in briefly. Generally, when you say like lending cycle, project also has a cycle. So first you need to understand a project concepts. You need to identify there is a requirement. Later also we'll learn more on this. So it's something whether there is a need to have a project. So in the previous our example, this the commercial property, the commercial shop owner has identified the need to have a supermarket concept, because he feels, he might have done some research, because the customer behavior pattern, taste and difference now change. You see that there are a lot of supermarkets are coming and doing well. So you need to identify the particular concept. So once you identify, then you try to formulate concepts, plan the concept, a schedule, how I'm going to do, what are my financing partners, which level that I should do this, what are the area, who should my buyers, suppliers. So like that you have to formulate the concepts. Then you try to do a project appraisal, the viability, right? So basically, right, we call project appraisal report, a project report, in terms of marketing, in terms of technical, in terms of financial, economical. So you try to do, the viability checking, because initially plan, schedule, feasibility, then you do a kind of a complete appraisal. And then if you want to make some partners here, bank, investors, it's like joint venture, the investors. So then you need to present it accordingly to get the buy-in of your financing partners. Even when you go to a bank, tell that I'm so and so, so we have done some groundwork. This is our planning. This is our appraisal. So this is the project report. So what do you think about this? Whether you can finance us. That's how you presenting. Then once you present, let's say that they are ready, or if not, let's say you are trying to go it alone with some investors, then you try to implement it. Stage wise you are going to implement, maybe the land purchase, something about preparation, modification, development of the land, putting on the building. So like that, there will be stage wise implementation. Some activities are parallel going, some like sequential. Right? For that, we might get the support of network diagrams, Gantt charts, There are so many tools available in project management. So then follow-up and monitoring. Let's say you have done everything, implemented, then you need to do the follow-up. Like every time you do, whether everything is in line. As per my budgets, actuals are in line. Any differences, any changes, what other things should I do in order to bring back my original plan, original expectation, to run the project in original expectations. Example, let's say you may have done the project and everything is fine, then your sales target for first to second to third month or to a quarter should be like this. Now you see there may be some change on that. Why? Customers may not be coming in as expected. So probably you might have to change some, maybe the product range, offering, advertising campaign to bring back, you know, the original targets. That's what you follow up and monitoring. Then finally review. So that's something that you do, like when you approve a credit, you do a review on the particular credit. Similar, a project review also you are going to do. After some time, you do a review to see what went wrong, what actually we did as right. You need to understand those things, right? So this is the project cycle. There may be, you know, so many new things coming or could be replaced with some of these stages, because this is not a hard and fast stage. Let's say if you want to write it, you can combine one or two and write as maybe several steps. For example, maybe the identification or formulation could be one, or maybe identification first and then formulation and appraisal is maybe the combined, or pre-feasibility or feasibility. It could be another two names. Or maybe the instead of presentation, you can say implementation could be a major component here. Then follow-up, monitoring, and the review. Like you can have maybe 5 stages also instead of a 7th stage here. No harm. Only thing is you need to follow all the activities in the different names, but activities to be there to ensure that project is run, project is appraised, project is formulated in a proper way. Okay, right. Right. Any questions? Because now we try to go into a bit of detail about this, the concepts that we just discussed. Right. Any questions? Andrew, Roshni, Samindri, any thoughts? Questions? Nothing? All clear? Tanya? Anything to add or any gray areas? Are you clear what I am, you know, saying? Nawaz? Because I am actually not rushing through maybe the first day, because we want to get on these concepts very clearly. Obviously, yes, later also you can come back and refer, but you know, we first understand the concepts clear. So later you can bet on very, like you can put a T20 in halfway through, but initially you have to play a kind of a, you know, test match, because this is a bit of new area for all of us. I know the credit management is nothing to do with this, but you know, you might have done credit management different disciplines in different way, but development financing is, you know, very niche, and so you need to go very slowly, put the concepts very clear, then understand the concepts. But if you don't understand anything, please just ask. Even not today, you can put a message, you can ask it even the next week, so no harm. Nawaz, anything from your end which is not clear?
No, sir, actually all are clear.
Okay. About Shashika, we have Devendra joined later. Devinder, which bank you are representing? Yasiru, that because we have given introduction each of us. Which bank you are from? You are in the presentation. Okay, that's okay. So we move. Right. Then identification and selection. So that's what we briefly discussed. So we'll go through to get a further understanding. Collection, compilation, and analysis of data to locate potential opportunities for starting businesses and development of such opportunities. That's what I was telling about. Just you can't think about, yes, I am going to do a supermarket here because my competitor has started a supermarket. I also wanted to do. Oh, my competitor has started a rice mill. I should also start a rice mill, otherwise I am a loser. Right? Oh, yeah, maybe government is promoting and you see the just post-pandemic, so we'll have a better tourism opportunities in 2022 onwards. So we need to start 3-star hotel and go to Kalpiti and purchase a land and do. No, you can't do those things in terms of project. It's like a formal, a steady, a slow process. Collection, compilation, and analysis. That 3 words tell you it's not an easy task, right? Then based on that, you'd say, yeah, there is opportunity, right? You do some cost-benefit analysis, or sometimes it could be something about even some cost could be incurred. You need to consult some prominent people, discussions with the relevant institutions, and bit of initial pilot market research should need, or some work undertaken by previous people you need to refer, right? So then only you see that yes, there could be opportunity. Opportunity could be business concept, which if turned into tangible product or service by the enterprise will result in profit. Right? You getting my point? The concepts or opportunity is a business concept. So maybe a supermarket, 3-star hotel, tea factory, rice mill. So if you put it to right track, right service, then it will generate profits, cash flows. If not, it end up with loss venture. So you need to keep those things in mind. So this idea, a collection, could be its own idea or someone else's idea. Someone else's means somebody would have developed the concept and it's tested in the market. What you need to do, you have to purchase it and run it. Example, say somebody would have done research into microhydro plant venture. He has done enough work through technical to economical to all other areas and found out some locations, and they might recommend, in this canal, in this stream, yes, you can have the microfinance, sorry, what do you call electricity generation, microhydro plant, tested, ready to implement. Then what you have to do is, yes, you need to negotiate, maybe some payment for the patent or whatever, then up and running, and after the stakeholder or the investor kind of. That is somebody have developed, and then you can see it's the viable proposition. We've tested and done. Or maybe own idea. So since that you have been working about for a company for about a longer period, and you contemplating it's now enough, I want to move it out, start my own business, right? So it's something, your own idea, it could be a project concept. So I just wanted to highlight here is a selection and identification of the project is not an easy task. It's a combination of activity. It's a step-by-step activity. It's involved with several processes: collection, compilation, and analysis. So having said that, based on this, so you identify, you select, this is the right concepts, project idea, I need to go to next level. So very important area, because why that I am highlighting this is those things could be tested in like under general question. In a part of your main question, this could be one of the questions could be asked, write 4 stages of project cycle. Then you need to know 1, 2, 3, 4 out of 6 or 7, you need to write 4. So briefly describe 2 project stages. So then you have to need maybe project identification and selection, or it could be something about feasibility study, or it could be something about feasibility study, follow-up and review. So like you need to write about short note about 3-4 lines. For that, this is required. Then this identification and the selection is depend on a couple of items. It's entrepreneur's knowledge and skill. Very important. Not every businessman, every trader, every person cannot come up with a good projects. He should have knowledge, skills, experience. Very important. So that's why I see not very many entrepreneurs are successful, right? There are entrepreneurs. They do different level of businesses, but you can't expect everybody to be success stories, no? That's one. And resources available with the entrepreneur. Entrepreneur should have resources, money and otherwise. Funds obvious. And then maybe networking, maybe other resourcing materials, maybe infrastructure support like that. So should be market potential is another one. If there is no market, adequate market growth, market share, customer preferences, then no point. You can't do that. Example, you say that yeah, supermarket is is very good, but it's not good for your area. It's good for some other area. Because there's no market for that. People are not ready to move to supermarket concepts. Because that inherently they prefer maybe small boutique shop. That it depends, right? But when it comes to the Western province, obviously people are very much interested going to the supermarket and having parking with AC, with some other support services. People are willing to take that experience. Availability of assistance, support and other facilities. That is very important. About infrastructure support, utility, water, electricity, road, parking, so many other things also. Because that require to complete your proposition. So if not, it's not viable. Finally, progress success made by others. Right? Let's say now we are going to do a supermarket again. You are going to do a hotel. Right? Now when you plan to go to say Kalpitiya, right? You see that 2-3 couple of previous investors have started hotel, but there is no proper or maybe better or maybe good proposition. They are not even making adequate income due to various reasons. Means you putting another 4th hotel may not work for you and work for the business, rest of the team as well. So that gives you indication it's not a sound project, but vice versa. Initial 3 doing very well, then still you see there's a potential. Then you come up with some unique features. Instead of they doing, you do something maybe cabana or maybe a boutique type of hotel or with some Ayurvedic concept. maybe so different concepts or different maybe some different the package features, still a 3-star. That exactly, even without that you would perform, but you do different things, so some value addition to you. So those are the things that the success of project: entrepreneurs knowledge, resource availability, market potential, availability of assistance and support, progress and success made by others. So very important to understand those. Then formulation, we call that is something about planning, scheduling, free feasibility, project formulation, project appraisal. So everything coming into this level, right? So it's like a couple of steps are there. This is basically very important. Yes, you have identified, select and everything fine, but this is most important part before implementation. So this is very important part. Careful, critical project idea about the viability, feasibility, various components, right? Whether to, what about equipment, land development, buildings, contingency, working capital, machinery, training, so many things you need to look into. If something going bad in whatever the component, may have a bigger impact on your project. So it again, you need to check with about the marketing viability, technical, economic, legal, financial, so many things that you need to look into. Probably if you are unable to do it, then you need to consult specialists, maybe consultants who are capable of doing that. Then assessment of various aspects of investment proposition. That's what I was telling about, the legal to technical to those things. So very important before investing, before you are putting your hands into the investment, you need to do these type of things. Then only you can come up and say, yes, this is viable. This is okay to negotiate for the further, okay for the implementation. Very important area. So if you see it in more detail, this is what exactly we do. Free feasibility analysis. Whether you see, rather than going into very detailed analysis, you see with some kind of investment, some kind of a cost, whether this is viable, this is feasible, free feasible. Maybe you hire a consultant and run it, some project experts, and you see whether this is, as a concept, this is viable. Then you do a detailed analysis about market, economic, technical, project, input, output, environmental, managerial, financial, and risk management. Everything go into very detail on paper. Finally, you prepare a project report and go to a financial institution and meet the prospective investment and meet the other stakeholders. If you require additional financing, financial support, investor support. If not, you can go ahead with and do it your own money. But at this stage, it's a do or die, because if you see that things are not coming your way, things are not lucrative as planned, so you need to wait and see maybe another 1 to 2 years. So probably you will stop the further actioning on this. This planning, this scheduling, this formulation is very important for the success of the project. Even later also, into follow-up and recovery, so follow-up and review is basically done on the identified targets at this stage. Say market to be this level, production to be this level, financial target to be this level. So you're planning here. After implementation, so you review it every year or half year, whether we are in line, in track, out of the track. So you discuss those things. Getting my point? Fine. Any thoughts? Any idea? Right. I know this is not difficult, but the concepts are important because we need to know these things in detail. Right. Because in case that sometimes they ask about write a short note, or what do you understand by the project appraisal, for project formulation, project selection, or stages of project cycle, you need to be ready to answer those questions. Those are not difficult, but general question they would ask, right? Then this project appraisal, it's something more a technical perspective what we are going to do. Actually, it is within the feasibility exercise also, right? So we try to see whether how this is viable in terms of financial or economic, right? Because you do everything, but end of the day, this should be commercially viable. Commercially viable in the sense it should be economically, it should be make some impact like social, economic, and legal. Everything could be something, and also financial perspective because it should be able to pay your debts. So suppose the bank or lending institutions wanted to take part in this project, to introduce some component, debt component, they do independent evaluation on this in terms of financial, in terms of economic. So how am I going to do this? So when I'm going to do this, so you need to look at different components. It's like this. It's a function of couple of areas. Like feasibility study, yes, we do it. But here, appraisal is a more critical and independent perspective. It's done could be some maybe investors who wanted to invest on this project. It could be bankers who wanted to introduce a debt component, debt capital to this project. It's something about these letters. It is infrastructure, government economic policy, market, entrepreneur strength, techno managerial capability, risk factors of the business. Remember, the same thing had been done by the entrepreneur, project sponsor through this formulation stage. But in the appraisal stage also, the same thing could be conducted in different perspective by the proposed investors, bankers to the project. Because they should be independently confident that this project is viable commercially and financially, economically, financially. Say, infrastructure. What the infrastructure? Road, electricity, water, industrial zone location, transportation, closer to harbor, so many things depending on the project. If you remember recently, one of the Sri Lankans started the biggest tire manufacturing project factory in Varana, in Kalutara district. So now, when a bank wanted to finance that sort of a huge project, it would look most of the infrastructure facilities available towards its business project. About electricity, 2-3 transformers separate, road, water, closer to the highway, availability of raw materials, right? So very important, because without the infrastructure, this type of a project could not be survived. Initially, it has to be in place, those things in place. Then government policy, whether the government is support a local economy, government is promoting local economy, or government is promoting import economy. What about the tax? What about the other economic support or sanctions? Very important. So if the things are not in the project way, our way, so we need to think and whether we have adequate support from the government. Third, market feasibility is also we spoke about. Adequate market growth, market share, taste preferences, future outlook, competition. I mean, lot of things. Because if anything is not in line, in support towards our project, it means very difficult to proceed with. Then the entrepreneur's strength, equity and loan. How much the entrepreneur could bring it here? It's very small amount, big amount, average amount. We need to know. Otherwise, now entrepreneur could bring only 5-10%, where a bank is expected to put 90%. That's not viable in terms of bank. Yeah, bank would go up to 50 to 60%, but equal amount like 40 to 50% should come from the entrepreneur. In order to do that, he should be financially strong, right? Otherwise, he can't bring the particular equity towards the business. Then techno-managerial capability. It's called technical appraisal and managerial appraisal, management appraisal, management feasibility. Very important, because if he is not savvy in terms of future business operations, then it's a question mark. Let's say he wanted to run a hotel. Obviously, they don't have, we feel, no adequate experience. But if we can bring down a good person to run the hotel, so that's acceptable, because he has means, enough contacts. Using those, he can bring a very good person, number one person in the market to run the hotel. So we are happy, right? He might not have, but he has a capacity to bring a person to run the hotel, which is comfortable for a bank or investor. There are risk factors. There may be so many things we'll learn later, like maybe management, maybe market, maybe technical, economic, legal. So many risks could impact. Like maybe higher competition is a marketing risk that you are talking about. Or lack of up-to-date technology or outdated technology is a technological risk that you are talking about. Not experienced, skilled, qualified management is a management risk that you are asking. You are worrying. You need to be confident about the proposed management to run the particular venture. So the success of the project depends on these characters, these items, these areas. So you look into those critically to see whether a project is successful in running. Then implementation and follow-up also very important area. Suppose you've done everything in a project cycle, implementation part, follow-up part, or review next to come. Very important, because without this, not a single project would be successful. Everything you done, homework, fine, everything is fine. But when come to the implementation, it should also be done with due care, very much control. Why? Now, example. Now, if it is an existing business, you give a working capital loan, what would happen? You just approve a loan and you give the money to customer current account, to mark a limit and ask him to operate. But in a project, can we do that? You can't, right? You have to do it stage-wise, step by step. If say 50 million loan, just a check to the 50 million, we never know what he would do to that 50 million. He would exactly do as planned, or he would do something totally different. Hence that you, let's say, money, intended purpose, you have to ensure that. Purchasing of a land, maybe check goes to the owner of the property. Land development, as per the budget. Building, putting of the building, as per the square feet cost. I mean, three things that you need to look into. Even at time to time, the monitoring supervision is also important, whether we are in right track. Are we in right timeline to complete the project? Are we not? You getting my point? So a lot of things one has to be thorough with. Then things like post disbursement monitoring, importance of monitoring and supervision, things which we need to look like budgets, top line to cost related, income related, and follow-up actions with daily, monthly, quarterly, in terms of stock, in terms of financial, in terms of condition. I mean, so many things that one has to be aware with. So those are the things that you need to be keep in mind in terms of project. Okay. Finally, a review and the evaluation as the last part of the project cycle, because we need to understand successes and the failures of the project for relaunching. If you are going to do it again, evaluation and the review. So that sums the initial part I want to discuss with you. So basically what we have done so far is we try to understand what is project, we have defined the nature, importance, and the project cycle, stages of project cycle, and we understand the key stages in detail of the project cycle. Though we learn almost like 1.5 hours, I know it's not a very great or very what do you call heavy data information, but very important information. There may be a couple of questions has been given by the examiner during last examination session relevant to these areas. So I invite you to be very much thorough on these concepts. You can read so many things and also you can refer my note also, but be aware with what is project, what is project lending, what is infrastructure lending, what's the difference between project lending versus the normal lending, which also we are going to discuss in little while, and what are the features of the project, why the projects are important in an economy like Sri Lanka, what are the the value addition the project could bring to economy a country like Sri Lanka. So always try to get more and more information what you learn as a basic, right? Before moving to the basic categories of lending, it's now time to you to ask questions. Any things that you need to get clear what we learned here, or any things that you can question and you can get some more exposure. So please ask questions. Any questions? Akila, Nawaz, Samindri, Ravin, Roshni, any questions?
Clear, sir.
Fine. Nawaz, anything to add for the benefit of the team? Roshni, anything to add? Any experience that you come across, any customers you have given loans to projects now in difficulty? Any experience, Nawaz and Roshni, because you are into that recovery, our two recovery experts here? Praveen, anything from UN that you have done, any project financing proposals, what we have discussed so far? Any features you have understood or identified? Anybody can add your feedback. It's good that if we can, discuss this at more interactive basis. Yes, Samindri, maybe Samindri that I might have use some my previous presentation here, because which I have shared is not in maybe have some technical sort of things here, but I'll share this as well, because here 1 or 2 new slides I think I have incorporated. That's why you see the kind of the some discrepancies in what I am presenting and what I have shared. So we'll share this as well later. Any questions? Because I maybe what I have shared may not have exactly go into detail, but I think I thought that since that you are a bit of interactive guys, you have interested, and so many of you are into credit and kind of, so that I wanted to use this as well. So probably this has more content than what I have shared, but no harm anyway. I'm planning to discuss those things in later, but today that we go into this much of detail because I feel that you are a bit of interest in these areas, right? Yasiru, Tanya, anything to add? Okay, right. Let's then we have some more time, but let's move to the next part. And what I'll do is even next week also we'll touch upon these areas for your benefit, right? So then it's a bit of first 2-3 days, so we need to do a bit of catching up like that, right? Then we can understand there are 3 types of or maybe 3 or 4 actually categories of lending. So I must say that this is not hard and fast classification, because though we can classify for the learning purposes, asset-based, cash flow-based, project-based, fee-based, right? There are so many classifications, but when in practice, it is not exactly required to follow, asset-based lending and we do this, cash flow-based lending and we do this, right? So fee-based lending, we do no. There may be combination of these concepts also, but just for the learning, understanding, learning sake, so we try to categorize type of some categories of lending. Out of these 3, we also have another one we call fee-based lending. So first I explain the fee-based lending, which is not here. It's something that you provide financing facilities to the customers in the aim of getting fee income. Okay, like what about bank guarantees? What about performance or type of bonds to the construction sector? What about shipping guarantees? What about letter of credits? All those of things are you offer to the customer as a contingent liability products. They are not on balance sheet products. So they are recorded in off balance sheet. But once you offer these facilities to the customer to support their working capital requirements, you get an income, which is fee income. In most of your bank, you can see you can have 2 income streams, that is interest income or service or fee income. So interest income, obviously you are getting from products you offer to customer which are in on balance sheet. All those products are coming under asset, cash flow and project based lending. This fee base is off balance sheet and which are offered to customer as contingent liabilities. By offering, you are getting income. Income is identified as fee-based lending, right? So basically, those products like LCs, bank guarantees, performance bonds are there to support customer and to earn some income. So those products, those lending, we will call them fee-based lending, which is outside to these 3. I just want to share that type of lending also, because it's important in case if you want to get further understand what type of lending is. Okay, any questions on the fee-based lending? Anything that you want further on that? Okay, nothing. Right. Please let me know if you want anything to know about the fee-based lending, because I have not put a slide here on that, but I just wanted to share that there is a thing called fee-based lending, some underlying features of the fee-based lending. Then asset-based lending. So asset-based lending is basically loan granted based on the value of the property, offered as a collateral security. So technically, you are not worried about other features, other areas while you offering this product. What are those products? It could be gold loans, it could be pawning, it could be cashback loans, it could be cashback ODs. So technically, you predominantly look into asset, even leasing to some extent. How they are going to repay or end use of the product is secondary importance. Means that let this customer come in and asking, I want a cashback OD. Here is my FD. It's very rare you are asking, sir, that can I know that the purpose of using this money? Probably you might not ask. You just ask, but it's not the main question. Can I know how we are going to repay this debt? How do you service? Probably you might not. Because you have the leeway, about say 90% of the FD could be your advance. If he is not going to pay, you can easily uplift and settle your outstanding. So predominantly we looked into the asset-based lending, right? But you can ask those questions. You can get to know that how it's going to service, but it's not a must. Sometimes when you are going to do that, it might impact your customer service. Let's say the pawning customer. If you're asking so much of those questions, probably you might say, no, answer, pawning because he comes to do a pawning, presuming the bank is not asking some personal question. Because bank has the asset, right? If I'm not going to pay that, you can, auction my pawning article and get my outstanding settled. That's how he's feeling. So that's why we have that type of product. So asset-based means we depend on the value of the asset, not the repayment source, or not important about end use. Okay, right. So these are some advantages and disadvantages of the asset-based lending. What is the advantages? So lending appears less risky, obviously, because we have an underlying asset to act in case of a default. Easy to define, easy to grant, easy to accommodate. Why? Because we know the value, 90% of that, 70% of carat age 22, 24, 18. So there may be set advance rates. Very easy. Even over the counter we can do in the pawning. Yeah, pawning officer will see the quality of the whatever the article and they say it's carat age 22. So 70% rate sheet will do. Cashback 90, loan or that. Even leasing, we might be able to Japanese to Indian to European to, there's a set market, so we'll easily do. Right? In leasing bit, we have some couple of a combination where we'll see about the repayment also, but just a kind of asset-backed product. Some advantages. So disadvantages. Greater risk of delinquency due to what? Loan size not based on borrower's repayment capacity. Loan size not based on borrower's repayment capacity. Repayment schedule not based on client's cash flows. So value of property could fluctuate. What are those? Because now, let's say the customer and tell, so I have 5 million OD. Can I get 4 million? We'll say yes. It's 80% we'll provide. But it is not based on borrower's repayment capacity. We never know the customer can repay or not. And repayment schedule not based on client's cash flows. repayment schedule, not based on client's cash flows. Why? We have not looked for customers' cash flows, no? Because we depend on value. Then value could going up or going down. Maybe gold. We have very good experience, right? In 5-6 years back, you know, the value of the gold crashed. So many banks, you know, made a high impairment charges for that. World market price has come down. Maybe property could be, vehicle could be, cash obviously not, but there is a chance of fluctuating the property value. So those are some disadvantages. Right? So asset-based lending, yes, some advantages as well as disadvantages also there. Right? So I'm not going to go the rest of the cash flow and project lending, but I just, you know, plan to stop here, but we'll make a kind of a summary what we have done so far being the first day. So what we have done today, so since we have 30 to 14 participants here, so I initially discuss about the features of the development financing paper. Then we discuss about what is our way forward, the method of study, what I am going to do, what I am expecting from you. Thirdly, I discuss with you the importance of maintaining a file which you can add articles in a soft form or the hard form relevant to development financing concept. Fourthly, we discuss about the syllabus where in syllabus, yes, we have 4 areas: introduction, SME financing, microfinancing, project financing. Higher weightage is the project financing, which comes to 3 to 4 questions in the paper. Microfinancing, 1 question. Alternatively, SME, maybe 1 to 2 questions, or maybe 1 or 2 questions again coming from generally. So in general, in the sense, it will cover all areas and also touch upon the prevailing economic, financial, market condition in the country. Fifthly, we try to start about introduction to project financing. We understood about the nature, importance, definition, stages of project cycle, details of the project cycle, and we discuss about identification and selection, project feasibility, formulation, project appraisal with detail, implementation and follow-up. Having done that, we move to 4 areas of categories of lending: fee-based, asset-based, cash flow-based, project-based. Fee-based, though it is not in the presentation, I briefly mentioned that the products which are in off-balance sheet in nature offered to customer with the view of getting a fee income. Asset-based lending predominantly depend on asset rather than end use or rather than repayment method. We offer on balance sheet products like owning, gold loans, cashback loans, ODs. So we discuss some advantages and disadvantages of the same. So next week we'll start with cash flow based lending, project based lending. We'll continue to the SME lending area. So my lesson plan could be introduction, then SME lending, sources of financing and those things. Then we go to the microfinancing. Finally, we will continue with the project financing. So as I was telling you, intermittently, depending on the time, so we will do some past paper question relevant to the things that we are doing here. And end of the presentation, end of the session also, we'll have 2 to 3 days past paper question discussions. So that's like today's session. So any questions, any input, any feedback from you, whether are we going okay, are we going slow, are we going fast, are you happy with whatever the way that we are discussing, any improvements on, you know, lecturing, any value additions should I bring? So we have another 2-3 minutes. Let's have your view. You can text it. or even next week you can suggest it, right? No harm. So any thoughts, views? Ravin, all are clear? Happy?
Clear, sir.
Fine. So next week also we'll meet sharp 8 o'clock. So we'll continue where we stopped. You can run through what we discussed, not greater contents, but thank you, Jinadari. You are joined later. Probably we will get an introduction from you next week. Actually, we got introduced each of us, but next week, so we'll do it again once the rest of the team join. So though these contents are not very detailed, but just go through it, get an idea. Anything that you need to clear it off, let me discuss next week. So again, thanks, Yasiru, right? So by the way, again, thank you very much for joining. Due to so many problems around you, right? And I wish everybody to be a very safe week ahead. Always wherever you be safe, take precautions, right? Nawaz, anything to tell?
No, sir, actually, I wanted to thank you. This teaching method is very good, and from start, you told without going straight to the subject, you started you gave us a detail of how to get ready for the subject. So thank you very much, and I look forward to learn with you. Thank you.
Right, great, Nawaz. No worries. So we will do. This is again, as I was telling, it should be very interactive. If anything, if you are not clear, let me know. Not clear. We want to, rediscuss. I am with you, right? That's a way forward, because this is not like not like traditional lending. So we, as a team, we need to go forward, right? Because I just deliver something and go back and get something from my BSL as my fees, not my method of lecturing. If you see whatever our examination results during the last 8 to 10 sessions, so maybe 95% is the pass rate. So whatever we do, so that's, I mean, not only my pass rates, that's what I was telling you, the pass rate is not I am worrying about. I am 100%, maybe even more than that, I am sure that you will pass, but get a good A pass, good B pass. That's what our target should be, while collecting more and more insights what we are learning, share with others, right? So maybe today that you learn something, and have a discussion with your colleague in office and get something from him, and come back next week and say that I have a query to this extent, whether what kind of a solution we have. Maybe I might be able to support you, maybe one of our team members could be able to support you, right? Thank you again. So let's meet next week at 8 o'clock. So just go through what we learned so far, and we will continue from that onwards. I was telling you again, be safe, stay safe wherever you go, because the times are not great. First you have to look after yourself and your family, and again, when you go to bank, I know it's very difficult to think about your safety, but your safety is first, right? So let's meet next week. Again, have a safe and great week ahead. Thank you very much for joining me. All the very best. Take care, guys.